In less than 24 hours from the time you're watching this video, Bitcoin is going to go through what is called the Bitcoin halving. The halving happens every 4 years. The halving is a cyclical event, meaning that it happens on a regular basis, and for us is 4 years. So every 4 years, the halving happens, and this event decreases the inflation of Bitcoin, which is currently at 6.25 per block. So from this point onward, meaning tomorrow, when the halving happens, after that point until 4 years in the future, the rate of production will decrease by half. But to understand how the rate of production is affected, we have to understand how a Bitcoin is created first. So without further ado, let's get into it. A lot of TradFi people, they think the halving, or the first understanding that they have from the halving, because of the name half, they believe it is sort of like a split, like a stock split.
You are wrong.
For example, you have a stock that is worth $10, but then you check again and this stock now doubled the amount of total shares it had, and the price went from $10 to $5. That is called a split. But Bitcoin is not doing anything similar. So it is a misunderstanding of the word half, the halving, which actually means that the difficulty will increase by twofold. The halving part is just on lowering by half the rewards per block that the miners get paid to do this work. But what is this work and how is a Bitcoin created? Well, the Bitcoin network is a proof of work blockchain. Well, you remember that for example, Ethereum was proof of work before, and now it became proof of stake. So you most likely heard these terms before, but Bitcoin, for example, it is still proof of work, meaning that these machines, the users that want to get rewarded, they have to put their machines, which are miners, they have to put them to work. And what is the work that they do? Well, pretty much they get together and they solve an algorithm, an equation, you can call it a puzzle. So they solve this puzzle to maintain security, safety of the blockchain. And this is called a consensus model, meaning that all of these machines, they talk to each other and they confirm what's going on with these blocks. So this consensus, meaning that everyone is on the same page, and this makes it much safer if you compare it to traditional finances, because there can be no people copying and pasting in Bitcoin and putting in the blockchain. It's not going to happen because it needs to be validated. It needs to be a consensus by everyone that this transaction is legit. And you do this by these equations, by these puzzles that need to be solved by these machines. So how does it incentivize a user to buy a machine and spend his time and money and energy bill going to the roof to protect the network? Why would someone do that? Well, this is where the rewards part comes in. So for each block, and we have one block per 10 minutes. So every 10 minutes, there's a block in the Bitcoin network. And this block is pretty much a place where transactions are stored. So think of it, the example that everyone gives is a bus stop. And every 10 minutes, there's a bus. And whoever bids the highest can get into the bus. And these are the transactions. So the transactions are going to hop into this bus that comes every 10 minutes. And this bus will be delivered to the blockchain in the form of a block of transactions. So these transactions get put together into this bus. And because of this, the bus pays out these miners, the people that are behind the security of the blockchain. And this is where the rewards come from. So does it make sense for a miner to do that? Well, let's go to the math together. We have one block per 10 minutes. So that means that per hour, we have 6 blocks. So throughout the day, we have 144 blocks. And this is a fixed number. So all of these blocks daily, they have transactions. And these transactions, they bid to get in. So there's a transaction fee. Out of these fees, there's a payout. There's a reward system for the miners, for the people that are securing the network. And this is the reward that we're going to be talking about, which is currently 6.25 Bitcoin per block. So let's do the math together. If we know we have 144 blocks per day, and we know that the payout per block is 6.25, so we know that currently the rewards are 900 Bitcoin per day. That is a huge, huge number. So how much is that in US dollars? Well, you have to multiply that for the current price of Bitcoin, which right now is at $63,500 when I'm recording this, more or less. So that means that per day, miners, all these miners, so the collective group of miners, they get paid $57 million. Of course, if Bitcoin goes higher, this number in dollars, it increases. So it is a very profitable business actually. But now, because of the halving, this will change. It will no longer be 900 Bitcoin per day. It will be 450 because the number of blocks per 10 minutes per day still is the same. That number won't change. But what will change is the reward payout. So it will go to 625 to 3.125. So now you have to put the same amount of time to work and you get paid half. This brings a lot of questions. People are thinking, is this price thin? Is this gonna repeat? Like you've seen this image before, people showing that the halving is cyclical, and with that, the pricing of Bitcoin, it goes up like it did in the last halving. So between 12 to 18 months after the halving, you see a huge spike in the price of Bitcoin. This is the theory that most people agree with. You also have the people that believe now the market became smarter because this is the first time ever since all the halvings that happened before where the all-time high of Bitcoin happens before the halving. So you've seen that Bitcoin went above $70,000 a few weeks ago. So that means that things are changing. Things are no longer the same. Does that mean that now, because the market is smarter, things won't happen the same way it did for the last 3 halvings? Or does it mean that the next bull run will be stronger? We have a lot of different narratives now, which didn't happen on the last 3 halvings because there were way less people being interested in Bitcoin. And now there's an ETF narrative that just BlackRock's ETF bought more Bitcoin than what will be mined or what will be rewarded in a short span of months. So it means there's more demand but less supply, and the supply will be even shorter, so this will drive the price even higher. There's a lot of speculation, and behind speculation, this is where you can profit. So how would you profit from this situation? Again, we're not going to be here telling you Bitcoin is going to go to 100,000. We're not going to be here telling you Bitcoin is going to go to 20,000. We're just going to speculate with you on 3 different possibilities that will happen to Bitcoin and how you can adjust your strategy accordingly. So we're going to do that by using options, because options, they have limited downside and infinite upside if you're using plain options. And if you're using income products, strategy products that have multiple legs, you're gonna limit your downside, you're gonna cap your max risk, but you can still make 2 to 3, 400, 1000%, thousands percent ROI. So options are very versatile, they're very modular to adjust according to different strategies. So let's take a look at plain options. Let's go for Bitcoin right here, and the halving will be on April 20th. This is the calculation that people are saying right now. So let's say you believe that maybe by December, for example, you believe that by December, Bitcoin will no longer be bound to the $63,000 that it currently is, because you are bullish. So you think we are in a bullish scenario, and you think because of all these things that I mentioned, BlackRock, the cycle of bull run after the halving, all of these things, you believe that Bitcoin will spike. So you believe Bitcoin will spike to, let's say, $80,000 or maybe $90,000, $100,000. So what you can do, you can buy a call. So you can go right here and you can choose the strike. Usually the more out of the money, again, if you don't know what out of the money, at the money, and in the money is, I'm going to leave a card here. You can check this video out. It is an introduction to options. You can understand a little bit more about the technical parts of options, and you can come back to this video after you watch that so you can understand what we're talking about here. So go watch that and come back. But if you already know at the money, in the money, and out of the money, what you want to do, let's say we want to buy an at the money or closer to at the money that we have here for Bitcoin, but that will expire on December. So almost a leap. Like a leap is a long-term option, so have a long expiration. Not necessarily this can be considered a leap, but it is for sure something way longer than people are used to. So let's go for the $65,000 strike, and we enter the amount. Let's say we're going to go for 0.1. This is the size of the contract, meaning that I have to pay $2,000 upfront to buy. This is the premium of the option. I have to pay $2,000 upfront to buy this option. But again, as I explained in this video of the introduction to options, if an option is at the money, but then the underlying asset itself goes up, this option becomes in the money, and in the money options, they become very, very expensive. So the price that you pay, let's say you pay $2,000, by the time you're going to sell or close this option will be worth $6,000, $7,000, whatever it is. It depends on how much the price of Bitcoin will be on expiration or closer to expiration, and how much implied volatility will be for the market. So again, this is a bullish scenario for you to buy. So let's do this. Let's buy this because I am a believer on Bitcoin by the end of the year. So let's buy this just as an example. So we're going to pay $2,000. I'm going to click on buy. It says the option changed a little bit on the price. Now the price will be 222. I'll make payment anyways. And there we go. The order is complete. If I scroll down right here, you can find the Bitcoin call that we just bought. But what if you are bearish? What if you believe the Bitcoin won't stay up? If Bitcoin will correct, it will go down maybe to 30,000 again, to 40,000, whatever it is. Well, you do the same thing, but for the put, because the put is for a bearish scenario. When you think things are going to go down, things are going to go south. So for the amount of options, we go from 0.1 again, just like the other contract. And we see right here that we have $1,585. This is the amount that I have to pay the premium for this option, for this put. Again, just like the call, this $1,500 that I pay, if Bitcoin goes down and it goes below my price, this option becomes in the money. And the price of this option that I pay $1,500, it could go up to 3,000, 4,000, 6,000, 10,000, whatever. It depends on what is the price of Bitcoin when I want to close this position. So I personally am not bearish, so I'm not gonna go through with this, but this is a speculation that you can do. Also, we have the income products. So if you believe Bitcoin will stay between a certain price or above or below a certain price, what you can do, you can come right here to this income products. And let's say you believe that by next week, so by the 26th, which is after the halving, we're gonna have a huge correction or no movement at all, or a lot of movement. If you believe any of these will happen, you can prepare yourself. Let's say, for example, here we have the expiration date for the 26th, or all of these are 26th of April, and you believe Bitcoin will stay, for example, below 65,000. So this is a pretty good chance that it will stay below 65,000. Now it is at 63,000, or maybe you believe it will be rallying up. You're bullish and you believe it will be above 72,000. By that, you can see the difference in payouts. The max profit for one is 24%, and for the other is 348%. So you can see how much difference it makes according to the price of Bitcoin itself by that expiration. So let's say, for example, we believe that will be above 72,000. So let's open a position and let's do the contract size as well. 0.1. Right now, we know how much we're going to lose and how much we're going to make. So I spent $37.40 to open this position at 0.1 of a contract, so a 0.1 size of a contract, but I can make $130, so almost 4x the amount of money that I put in. You can see it always updates when I talk a little bit too much, because the prices itself of Bitcoin and the option itself, they also fluctuate. So and now I have to pay $40, but I make $128, so a very good ROI for me. So let's say I open this position. The position is open, you can see, but also if you're not as bullish as me or not bearish as me, you can choose whatever we have here to offer you. Of course, we're going to have soon more and more strategies, because we're going to have a new UI coming with a new front end. We can adopt more things and we can provide more things for you to have more passive income strategies. So if you want to know how the new UI will look and how the new strategies will look, the link's going to be also up here in the top right corner. That being said, what do you believe Bitcoin will do by the end of the year or after the halving? What do you think is the flow of Bitcoin? Is it to go up, or is it to correct and to go down because it is already priced in? So let us know down in the comments. Let's have a little chat on Bitcoin price analysis, technical analysis, whatever you want to talk about. But what I know for sure is that Bitcoin is the digital gold. And because of that, I personally am very bullish on Bitcoin. Again, we can agree on disagreeing, but just let me know your comments down below and let's discuss on future prices, on where do you see, what is the strategy that you're taking on Bitcoin. So I'll see you down here. And also, if you can take 1 second to scroll down, like, subscribe, and turn on notifications so you don't miss the next videos when they come out, I will appreciate you a lot. So thanks again, and I'll catch you guys in the next video. Peace out.